Hey guys, how are you? So it's Avi here again, and in this video I want to make it a bit more educational about the basics and some of the important fundamentals of the tools that we're using. So the agenda that we will have for this video will be how to read candles, which is more for somewhat of beginnings of trading, but I need to make sure that I explain that and what we're really looking at. Okay, how to understand TradingView in terms of charting and where you are looking when you're changing time frames and a lot of those different things. It's very important to make sure that it's easier for you to navigate. Okay, also how to find the best type supply and demands and why they are really also the best and what way you want to work them. Okay, because what happened, I used to chart, which I will post in here, over 20-30 supply and demands in one chart. And what happened, after my mentor, luckily to me, he actually taught me how to find the best ones so they have more probability of working out. We will talk about that as well. And those few things are really worthwhile for you to watch and learn them, because it will be multiply and growing over time. It's compounding knowledge, compounding education on that, and then how to find these trend lines that will be very beneficial and powerful for your trading. Okay, now why trend lines for some people a bit harder? Because they don't go in straight lines, they go in a bit of a shape to the side. So many people have a bit of a harder time to see that, because they might think, okay, this is somewhat of a trend line, let's say here, but it's not always. So we'll dive into it and we will explain more about that. Okay, so firstly, let's start to understand how to read the candles. Okay, what is a candle? Because in theory, you can have many different ones. Okay, you can have lines, you can have all other ones that you can use, but we only use candles of such sort that is basically the most basic candles. Okay, and you can really change them in terms of colors as well. Okay, but what we use as body, borders, and wicks, all of them are green and red. Now some people say green and red, it's psychologically not that good for us as humans, because we are tend to panic when we see red on PNL or red on any type of format, and we tend to feel excited when we see green. However, when you systematically build your trading, you will not really care about that. You will not look at the numbers because it's more systematic. No emotion need to be attached. We will talk about that in another video that has to do with psychological mindset of trading. Okay, so now let's look at those candles that we're seeing here. And what I want you to pay attention, because when I will be mentioning some things about opening, closing, the high of the candle, the low of the candle, the wick, and the percentage and everything, you will see that here on the top. Okay, so O, it's for opening, H is for high, L is for low, close, it's for C is for close of the candle. Okay, so what we will look at, two candles. Okay, because we will see many different type of candles, but we will look in particularly here on the two that we are seeing right here. Okay, so I will come closer. Okay, so the market just closed, that's why we see post. Okay, but to stay on track, so what happened, this is a green candle because it's a positive day candle. Okay, this is a red candle, it's a bearish. So there's bullish and bearish type of candles. So the bulls want the market to go higher, the bearish wants to push the candles lower. Why? The bears like to sleep and be like lower energy, and the bulls like to go and push it forward. Okay, so that's how we really look at that. So what happened here? Okay, we have here the open of the candle for the green. The open of the candle will be here. Okay, so this will be the open of the candle. One moment, let me actually do of such way that it will be like this. Open of the candle will be here. 1 second, I will take a drawing for that. Let me see. So also what you will recognize, there is a lot. Oh, actually, I can do that. There is a lot of different tools within here. Okay, so this is the open. I want to remove that. This is the open for what you call this, for the bullish candle. Okay, this is the close, of this candle. Okay, then you have the high of this candle, and then you have the low of this candle. Okay, so what happens here, what you will see, many times people confuse that, especially at the beginning when they go from bullish to bearish. They think it's pretty much the same. It's very similar. Okay, in what sense? That you have here obviously the low. Okay, you have here obviously the high. Okay, because the wick is the high. Okay, the high of the wick, and sometimes you see here it's the high, there is no wick, so it's the open and the high of this candle. Okay, but what happened here, as you probably just heard me saying, this is the close on the bottom and the open on the top. Okay, so you will have this basically reversed. This body is the price range that it's moved during that day. So here, this is 25 cents for that day that it's moved higher. And this is 17 cents that it's moved lower. The percentage here is basically the amount of move based on the price compared to the chart, and on the side here it's the volume that was traded that day. Okay, so here I'm basically explaining the candles and how to read already the trading view with that as well. Okay, so you have those two things. So basically it's a bullish candles, it will be the close on the top, because what happened, it's open on the bottom, it had to go higher, so it will be green. And here on the other hand, it's opened on the top and it had to go lower, and that's why it's red. So it's closed at this, but the lowest it went, it was at the bottom of the wick. So sometimes you will see wicks like that. Okay, so it went all the way here and went back up here, and basically that's we will call hammer. Okay, so it's basically a hammer, as if the hammer will fall down, and that's the handle of the hammer. So it's very bearish because it's red. It would be bullish if it would be exactly the other way around. Okay, so let me see. So this one, you see, it's a bullish. It was green, and it's in this case went higher. Therefore, so basically how you look at that, it came all the way down here, and then it went up and it's closed at the top. But here It went all the way, it's opened, went all the way to the bottom and went to the top, and it's basically went to the next day, but it was a red day on overall. Okay, so those are the things about the candles. Okay, you also will have a lot of more different candles patterns and whatnot that you will be able to review. I basically focus only on those ones that I mentioned to you. I don't put too much thought into pattern of a candle. It's a hammer, it's a doji and whatnot, because like you usually will have dojis when it's something similar to that. And that's also not, it's something more like that. You see 0.10, it's like sometimes zero cents that it's moved. So that would be more doji. Here 0.3. Okay, but we don't really want to focus and clutter our mind with too much information. Regardless, you will have to look at a lot of information already. Okay, so I don't recommend to focus on a lot of things that are irrelevant. Okay, so we'll remove that. Hold on, actually, let me just remove those drawings. Okay, those messages irrelevant for us. So that, then what you want to see here, that's an example. Okay, another thing that you want to know how to learn, how to read on candles, okay, which is very, very important and crucial. It's basically how to read and understand the context of the wicks, okay, and its body. Okay, let me elaborate on that. So let's an example here. See what happened. The candle came down from the top here to this area, okay, and you see how on the low here and the low here it didn't reach lower than that last one. Okay, and not only that, when it went lower to this area, bulls, the buyers, in other words as well, came in and decided to buy the market, so it's not going to go lower. So what they did that day, there was 9.5 million shares that were bought this day on Coca-Cola, because you can see the name here. Okay, so what happened, you will be able to see that out of this, okay, more than 70% more or less decided to buy the markets, okay, and push it higher. So this day the volume was obviously greener than red. Okay, in fact it was a lot greener, because what happened, it's opened here, it came all the way down here, and then it went back up here. So about even 90% was bought towards the bulls. Okay, so that, and what happened, look here, on the other hand, okay, most likely here, let's say, right, the following day will be green and higher as well, which you can see that as a result. It's not the case always, but many times it is. Okay, so you will need to do your analysis to make sure that you can learn more about that, to see when it works, when it doesn't, and know when to use it. And we will go over some of those things together as well. But look here, so what happened, you see those red days, you are able to see that every time it's closed as a red day, okay, it's had a very massive body towards the red. Look here, so it's giving you additional confirmation that most likely you can be bearish in such a market and buy lower. So this is another form of context that I would like to give you. And I will advise that as you are learning this, and as I always mention in my other videos as well, and I like to make sure that I help you as much as possible, because you're putting here time, which is the most valuable thing that you have. It's your time. So we want to make sure that your time is worthwhile, so you will be able to compound on that and implement towards your growth. So make sure to take notes and to start implementing right away. Basically, keep a journal and continuously write what you're learning here. Okay, if you need, you stop, you rewind and actually understand the concept. Because for me, I try to make sure that I explain it as simple as possible, and always will improve my explanation and teaching to make sure that it's more and more simple for your growth together with me here. This about the candles. Okay, if you guys have any questions, will be great. You can ask it away, and we'll be happy to explain on that. Okay, so how to read candles, we got that out of the way. Okay, so how to understand TradingView, which is a very big topic. Okay, because TradingView, it's one of the most amazing software for charting. Okay, and as you will be able to see, I actually made my chart, okay, as clean as possible. I will show you how my chart used to look like. Okay, give me just a moment, because that was a very interesting one. Before my mentor came into my my learnings, so my chart look more, copy image, 1 second, let me see how I can do this. So my chart looked more like this. Okay, that you can see, number one, it was black. Number two, I had like a lot of lines just like that, and that's why I say we will talk about trade lines. I had a ton of zones. So those are demand zone, those are supply zones. And basically what happened, I had all those supply zones one on top of each other. I didn't know where to enter, why to enter, and whatnot. So that was one of them. And I have many examples like that, but I will keep you with one here. And then also another one I had, which is very great, you will be able to see here. I had this one. So after, I was like, okay, I see that they change the color to white. Let me change that to white. I still had more supply zones. I had multiple of indicators, you see. So and for this indicator, I paid over $1,600, and honestly, it's a complete waste in my opinion. I mean, you can buy it if you want it, no problem, but you will have 1,000 indicators, thousands of dollars for courses and whatnot. Really, do your own analysis if you like it, but I learned this, the most simple it is, the better it is. That's why for me, there is never been indicators. Only yesterday I literally put this indicator, which is basically have to do with what you call this. It has to do with the moving averages, which daily moving averages, which will be the 20-day, 50-day, 100-day, and 200-day, which really I'm looking on the 100-day and 200-day, most important. Okay, but the 20 and the 50 is just there for an additional context, which we will get to. Okay, so how to read TradingView. So we'll start with basically first thing first, you want to have a username. You can have a free version, okay, and you can have a paid version. It's up to you which one you want. You can start with the free version or the paid version. You have access to a lot of similar features, but when you pay, obviously you will have certain features that will be more available to you than others. Okay, on the side here, you will be able to go over those features and understand which one are most convenient for you. You might not like this type of cross on your chart. You might like a dot, okay, or you might like an arrow or an eraser, whatever it is, okay. But for me, I prefer that, because when I go here, right, so I can put like this and I can see exactly as to where it's going. It works for me better. You do what works for you. Same thing here. You have all those type of lines and different things that might work for you. For me, those stuff work at the beginning when I was trying to learn more about the arrows, percentages, and everything. I used this one. Okay, why? Because what it does, it shows you, percentage of growth, how many candles you have here, how many days it is, and is this, and everything. So it's up to you what you like to use. But what you probably will be recommended to do, it's highlight as a star all the ones that you will be using more frequently. Okay, for me, I use those ones at the moment, which it's always possible to change. Okay, here also it will be the Fibonacci retracement, and before I saw many different videos and many different education about how to use that, and how you can use the Fibonacci on using all the different numbers. What I learned, that the most important is basically the 0, 1, and 50%, the Fibonacci, to make sure that you know where is the 50% between the price that you are looking at and the high and the low, the 50% of that. Okay, then you have those ones, which I will be honest with you, I never used it, never understand why people use those stuff, but maybe there is a reason that I'm still not familiar with. And maybe I will learn, maybe not about that. It's not as important for me right now. Also, then there is the long position, short position. Why that's very useful and helpful, especially for beginner traders, when they actually put what you call this, when they actually put positions, as we will learn about how to manage risk, how to make sure that you are not in the losses of massive trades. Okay, so let's an example. You say, okay, I enter here for the long, and I want here to be my stop loss. So your stop loss for 60%, and you will learn with me that it's very important to have the 2.5. You know what? 2.5 risk to reward. I also will add that here to talk about the risk to reward 1 to 2.5. It's a very important lesson. Okay. Which today I actually learned more information from my mentor about that, which was very good, and I will be more than happy to teach you that right away as well, to make sure that I'm more intact with that as well. I learn more as I teach as well. So basically what happened here, we want minimum 2.5 risk to reward, and that will help you calculate, even if you will need multiple of entries. So let's an example, you say, okay, my next entry will be from here. Your stop loss want to be the same point exactly, okay, and maybe your take profit, this one will be lower because it's allowing you because of the risk to reward and everything. So you do that. Okay, so it will help you to know exactly where is your number of take profit, where is your number of stop loss, where is the number of entry. You will be able to see all of that here. And if you are not sure, you can always click on that 2 times, or click on it once, go to that whatever settings icon, and then it will tell you entry price, profit taking. It will tell you exactly what's the profit taking. Then it will tell you what the stop level. stop loss. Okay, and what you will see, it's 2.08, it's 0.44, and all of those things. Okay, those are very important and amazing tools to use to make sure when you find your when you find your supply and demand, you will be using this one triangle. It's right here. As you can see, you have the brush, you have all of those things here that are more useful. So you will see sometimes we might be using this one. We might be using some of those for visual understanding of where the chart will go. We will talk about that too. But this, let's say an example, if all of a sudden we want to make sure that we highlight here, oh, 1 second, we want to make sure we highlight here, and then we go here and we say, okay, look at this zone right there. Okay, so we take and we say, okay, see, it's the lower here, and so on, right? So we basically then have all those information on there. Okay, next, what happened? We want to make sure, one moment. Next, basically you will be able to look over all those things and understand it for yourself as well. Okay, but you see here, one moment. Oh, right, so that's measuring that, no problem. We'll remove that and it comes back. Okay, so what happened here? This is a magnet that will be towards your candles. So let's an example. You see here, if I put it, boom, it went right to it. However, let's say here, you see I move it, it will go to the top or the bottom of the candle or the body. But if, let's say an example, you see I'm right here, when it's here, it will get magnet. If I press Control, it will come to my mouse back. If I release Control, it goes back. And you can see on the side, the magnet sign, it goes from being highlighted blue to not, because I'm pressing on the Control. Okay, that's very important. Then if, let's say an example, I want to make sure that I log this, okay, so this drawing will be locked. One moment, one moment. Let me see. Let me try to remember if I lock on this one, right? Yes. So if I lock on this one, and this, what was that one? If now I lock it, I can go and I can continuously chart, so I don't have to get all the time, like make one line here and then go back here and make one line and so on. I basically can just click on the line one time, click on that what you call this, pencil with the line, and it will stick to that drawing. It does. So okay, that's the one for that. Then the eye, if let's an example, we want to hide all the drawings that we have, we can definitely do that as well. Hide the indicators, hide everything, no problem. You can always hide. Okay, this is actually very good, because what's happening, if let's an example, you have the device that you are basically on your phone, right, and on the computer, laptop, or desktop, if you will use this one, it will go across all your devices at once. So you do want to make sure that if you are on your computer and then you will be using your phone because you're going to the beach or to the car or whatever, you want to make sure that you have that turned on. It will be easier for you. Okay. Oh yes, so this one basically will hide the drawing tools. Okay, and it will be easier for you to have more real state of the screen if it's bothering you. I put that personally here, so it's not bothering me. Here also, as you get your paid version, okay, you will have the possibility to have up to 16 what you call this, boxes within your screen. So if you have a big screen and you would like to split as many as possible, you will be able to. For my version, I'm able to do up to 2, up or down, no problem with that. And here it's actually coming out to tell you, if you want, you can go up to unlimited, which is the 16 charts, okay? Or you can go with the basic to the 1. Honestly, it doesn't really matter, because at the beginning you will need to get your focus on one chart at a time, and as you will be more advanced going towards more of the tradings, you will need to put many of the charts, because you already have your levels that you will be looking as professional trader. So you will just wait for it to come to your area and you will leave it on the screen. So you might have 5 screens, 6 screens, 10 screens, or maybe even 1. It's up to you. Okay, so that, and then here what happened, you are able to have multiple of folders, so to speak, okay, that will be within your your TradingView. So let's say this one, I never chart on it. It's if I want to go and just look at blank price action, so to see how it's going up and down, sideways, or whatever the case might be, I will be able to go to that one. Okay, you also can basically rename it. You can, very recommended to do auto save if all of a sudden you forgot to save and walk away, so it will save. Okay, it's very important, and go from there. If that's an example, it's something that I always do with every chart that I analyze. What I do, I take a picture, which is copy image or download image or whatever it might be, okay, and then I write more information about my trade that I planned and I'm taking, why I'm taking it, what type of confirmations I see, what type of price action I'm looking at, what is the feelings that I have planning this, and everything. I'm writing that, and it's helping a lot for after the fact with the reviews. Okay, here you have all of those settings that you can do. Okay, I will go over the settings tab. You can do that yourself. I just will show you which ones I have if all of a sudden you decide to do it for yourself. Okay, so those are the ones. Events, so basically those are the ones that you will see on the bottom. Okay, that's good. Now, what happens here, basically, if all of a sudden you want to make an alert, okay, you are able to make an alert in multiple ways. So number one, like this, you click on this tab to make an alert. It will come out. It will be price, daily line, or whatever the case might be, every time or one time, up to you what you want. Crossing up, crossing down, greater than, and so on. You have many options, okay. And then expiration date, if all of a sudden it's expiring by that date, you want to make sure you actually look at that, because if all of a sudden you put it for one day and then the following day after the expiration it actually works and your alert already turned off, it's not good. You can either have an alert name or it will show you as the message. Okay, you can put here, let's say, buy or sell or whatever it is, okay, and you are able then to right away get a trigger. You can also make sure that you make a sound, okay. You can make it pop into your email, work hook, hub, or play sound for how long, what type of sound, show as a pop-up on the application, on your phone and here on the computer. Very great thing. And also you can even send it as a text message that I actually disabled, I believe, but maybe now they took it out, but it used to be an email and text message. Okay, then what happened here? Okay, you have basically the indicators. So I personally, as I mentioned, I just use this one right now. All of those, I don't even look at them, not even at the volume one. Not something that I need. Learn to trade without that based on technical analysis and price action. Okay. Now, after that, we spoke about the candles. We only use candles that give us a lot of information, which is that. Some people are aware of the other ways that they can trade. So here with us, we will learn only that one. What happened here? As you actually will become a paid member, you will be able to have different ones that you can include in your time frame. Okay, so you are going to be able to also highlight them and add different time frames. Okay, as you saw, I just removed two, and you have those time frames as well. Okay, what happened? Many people, okay, and there is no right or wrong, but many people also like the 5 minutes to be on their chart. Some people, even I know, that have 1 minute chart. Okay, we only trade and watch basically mainly 30 minutes. It's more on the time of 30 minutes that we watch, or on daily. It's up to you what you want to watch, but for me, I watch a lot after doing my analysis daily. Here you will be able to look and understand the time of what each candle represents. It's very important. When you look at a chart, first thing you want to do is make sure that you glance towards here, because many times you will think like all the time frames, okay, no matter what time frame you take, all the candles look the same always. Okay, like 3 hours look the same as 15 minutes. In what sense? They look the same size, but they're really not the same size. So let's say here, okay, like this big one, it's a 27 cents down. On a daily, if you look at a even small one like this, it's 37 cents. 32 cents, sorry, or 50. You know, like it's a very different and time frame. So it's very important why I mentioned that and I stress about that, because for me, let's say an example, when I started and I was watching this, I didn't even pay attention to look here, and it was a bit of a time frame for me, a time gap for me to capture, to make sure that I look there, and then I know that I'm looking at the candle and I know what time frame it's for. Okay, so you can add anyone you like. You can go here. There is seconds as well. We don't look at that. And there is range. We don't look at that as well. So you can add here any time frame you like. You can make let's say an example, 12, let's say 12 minutes. Okay, then you will have your 12 minutes. You can add any one of them that you like. Okay, then what happened here, you click on that and you look for any ticker. Might be Walmart, might be whatever company name that you want. You can look it up here by either writing the company name. Okay, so let's say Facebook, which is Meta, they know that already, or the actual ticker itself. You can write both. Okay, here you can actually add on top of this chart. Many times, you know, like let's say in futures, ES and NQ move very similar. So you might want to say, hey, you know what? I want to check how the ES and what you call this NQ moves in comparison to each other, and you will be able to see, as you can see right here, it's added, and that orange line will be there, which in theory it's nothing like it because the NQ is priced much higher compared to this one. That's why there is all those percentages that you see popping up here. Okay, so we'll remove that now. Awesome. So that on that we'll cover that here. Basically, you have the watch list, okay, that you are able to put. You can put as many watch lists as you want, as many companies in each watch list as you desire as well. Okay, here on the bottom you will have the company information, like performance, market, like up, down, and everything. You will have here also the alerts that you have active, okay, and it will help you a lot because you chart one, and let's an example, you don't look at it for another 2-3 days or 1 week or 2 months, and all of a sudden, as you're charting something else, boom, it's gonna pop for you, and it came to an area that you waited for all this time, for only that to go if you didn't put an alert. It's very important to put the alert, okay. Then you have this, which is the notes. So if you have a lot of drawings, as you saw, you can come here and cancel each one individually. Hot news or hot stocks, it will show you here how, let's say this one went up by 20%, oh sorry, down. This one went up by all of that percentage. Very interesting. I will be also looking at that. You see, we always growing and learning together. That's why I say always it's great to share, because then I'm learning as well. I never used that before here, hot lists. But it's not that you need the hot list, you just want for your own analysis. It's not like you oh, today it's hot, so I have to jump on that trend. This is messages, ideas. It's not, honestly, I don't use those stuff, but it's great if you want to use, okay. And then you probably have your events, okay. So events of whatever it is, earnings, economy, earnings, it will show you here of all those companies that you might trade or you might not trade. So what happened also to know what will be when, here it's post market, okay. So you will see here post market go from 4 to 8, and basically the market itself is open from 9:30 to 4. Okay, and then from the post market, so from the pre-market, it will be from midnight, like after midnight, 4 a.m. to 9:30, and here it will be 9:30 to 4, and then 4 to 8. At 8 o'clock, it will shut down, will not move. The stocks, the shares. Okay, the shares, but the futures will move 24 hours, the 23 hours. The cryptos will be moving 24 hours. Okay, so it's very important here. As you will see this, it's earnings. Okay, so you will see, look here actually. So what happened, it's earnings positive, very positive here, very good here. But what happened, it's had a rally only to drop so much, and yet again positive, it went up. Okay, so you have to understand that it's not always about the news or always about the earnings, because you see here, look, earnings was again positive, look at the drop, dividends drop, earnings drop, but here earnings went up. So it's not always about the earnings. We will talk about that too. Okay, so I think we covered most of the stuff with TradingView. However, I actually just remember one more. What happens with TradingView, okay? You will be able also to add your paper trading account. Okay, so you can do paper trading here. Hold on 1 second. I don't know why they changed it. That paper trading. Paper trading. Paper trading. No. Paper trading account should be somewhere here. Yes. Oh, they changed trading. Okay, so paper trading, all you have to do is really click on that and click connect. I think you're eligible for that only when you pay, but I'm not too sure about that. So you can connect and then you will have your paper trading account. I want you to know that you will not be trading the same as paper trading, your actual trading. However, if you will follow the system that we will be learning together, you will be able to make sure that you do paper trading and your money the same. But it's important that you understand that never trade emotions, only trade your plan. Okay, otherwise we're gonna see losses. You can connect your broker to the platform. I personally don't really recommend, but you can. Okay, there is all those different brokers. So that's also another great thing that you can also go and build your own codes as indicators and signals and whatnot. I don't do any of that, but it's up to you if you do. Okay, so this is good. We just covered that one as well. Let me just highlight that. We covered that. Okay, how to find key and best supply and demand. Okay, so number one, I want to make sure that I do mention the way to look for those things. Okay, so what you want to do, okay, you want to make sure that you understand this is the way that you will be looking for supply and demand. Okay, so supply and demand, key ones that are being found basically will be following the next two things, which number one actually is location. Okay, why location? Because the location, you want to cut the crop, as they say, and not look anywhere in between here to here, anywhere. Okay, you don't need that. Where you really want to look for, okay, will be only in these areas here. And by the way, you see how we went over that? Now I clicked on it. I never used to, but now I do. So you want to look only in this area here, here, okay, here, because it's the pivot high, okay, especially before, not now, okay, and so on, okay, and let's say maybe here, okay. So that's the pivots of the low, not in the middle as it's in the move. So location is key. Okay, we understand that, right? Location is key. Location is key. No, location is key. Highlight. Location is number one. Okay, now second, after we understand the location, we want to make sure that we look at the size. What is the size? So let's look here. So we're looking at the daily. Remember, as we said, we want to make sure that we look at that stuff. Okay, so what happened here, you will be able to see that here that based on this candle, okay, you have, okay, basically those two things that are covering. So from here and you see the location is a perfect location. Okay, what happened then from this location? And okay, why this is the location? So you see how it said the move up. Okay, and on the way you will be able to see there is no many zones that were created as supply and demand along that way. Like you might say, what about this one? Okay, but that's why you see location. So it might be in this location, okay, before of a continuous move higher or here. But the size, what is the size stand for? It's basically goes with a structure. What is the structure? So the size is of the baseline, of the base candle, which is this one, okay, this green one. What are we seeing there? That it went higher, came back lower. So the wick, this wick is on the top, and then it came back. So it didn't, if it would be opposite, like in here, okay, like in here, you see, because it's red and it's almost as same size as the green, then it's not a good zone for us. Okay, but what happened? Because here it went up and then went down, and the move structure going down, it worked phenomenal. So what happened now? We basically looking at this. What is the structure then to that? Okay, let's talk for a moment about the location where it's, and it's at the top of the change to a direction. So it's a change to direction, the size of the baseline, and then the structure, which is also including with the size of the next candle. So you see this one was on the top 0.08%, okay, move, and this one was 0.80. So this one 0.08, 0.80. So it's a big move in comparison, not as big as this one, but fairly big. And then we want to see continuation of the sell-off. So continuation to the build of the structure. Okay, so we have those two things. So now look what happened, how it's worked out perfectly. So in hindsight, or in a perfect world, how we would play this, we would say, okay, we want to have a stop loss above this zone, okay, which will be a minimum of that sort, and we want to put 2.5 risk to reward. Okay, 2.5 at a minimum risk to reward. So you can see that it touched here, boom, right away checked out, and then it came to use it again, and it was in that area for 2 days, and then it's worked out again very well. Now you don't want to use a used supply and demand, so we're obviously not going to use that. You might ask why. I will explain right now. Because you will see third time it didn't work. Okay, it's traded in the supply and demand zone, or I should say supply zone, for 3 days, okay, here, and then on the fourth time it just didn't work, or the fifth time. You want to make sure you put it red to remember it's for a sell-off. Okay, perfect. So this one looks perfect. Okay, we explain the same thing you do on the opposite side. Okay, same thing you do on the opposite side. So let's look here. Okay, let's look here. So let's an example here also. You know, like it's worked really phenomenal there too. Coca-Cola. So look here. Actually, second time didn't touch. Second time here didn't touch, but second time here touched amazing and worked out phenomenally as well. So look here, what happened? Location, okay, it went higher, came down, and on the lowest area of the move, it saw the potential for that and build for us a structure, as basically a sizable and great location and a great sizable baseline for the candle. Now, also, what's the important structure that I forgot to mention there? It's this candle, the next candle. Important that the topper week will be, as you see here, that it's closing to the top, as close to the top. If, let's say an example, it's somewhere like this or somewhere like that, okay, like this, that you see that it's moved quite a bit away from the high of where it was, it's not a good zone. Okay, it's very important to understand, okay, that you want to have always, like, if it's something like this as a wick to the top here, it's no good structure, no good zone. You're gonna not be happy about the result that it will bring us. Okay, but here you see great baseline from the, and here actually what's important, you can also save as templates. Okay, so save as template, and then you basically make it daily, and here it should be changed to green. Okay, why? Because we want to buy. So you see what happened, that zone was created 1, 2, 3, 4, 5, 6 days later, touched, massive move to the top, almost came back to a U zone, and it didn't touch it, and it went a bit higher and came back again and went higher once again. But you will be able to see that the first time it touched a bit, second time a bit deeper, and went up quite massively again. And look how again after it's broke below aggressively. What there is also a great way to remember, once you have a demand zone or a supply zone, it might break it or use it multiple times. Once it breaks, don't delete it right away, because on a retest it might change its function from a demand to a supply, and it will sell off, or from a supply to demand. So remember that very well, because it's something to use in your trading journey. Okay, so this is towards the size, the structure, and the location. I hope it helps you to understand how you look for those things. If you have any questions, please feel free to ask. I will be more than happy to elaborate on that even more. Okay, so I want to explain about the trend lines. Okay, so this one, guys, I would recommend you, as I do as well. When I learn from my mentor, I stop, I take my notes and I copy that, so then whenever I need, I have it and I can repeat it. So when I'm teaching or when I'm doing for my own trades, I know exactly what I'm looking for. At the beginning, you might think, okay, it's so hard to find and whatnot, because I went through the same. That's why I'm repeating that. Or maybe you will not think like that. I hope you don't. But if you do, just do it multiple times and you will see how it will become almost second nature for you. So never worry about if it's difficult at the beginning. It's all fine. Okay, trend lines. Okay, trend lines, it's pretty much simple if you make it simple, and there is no problem to try multiple of times, because it's all fixable in the event that you need to fix. So let's say an example here. We're just going here. Okay, you will see this one no good, so we delete that, no problem. Then what we want to do, you can go here, click 5 years. Okay, when you click on 5 years, what happened, the chart right away will go weekly. Okay, when you click yearly, it will go 1 day. When you click, let's say, monthly, it will go 30 minutes and so on, 1 hour, 2 hours, and so on. Okay, so I like to click 5 years when I'm looking for trend lines of some sort. So it's weekly, or I like to go monthly to have an even bigger time frame. Okay, so one moment. So one moment, let's say here what we would like to do mainly. Okay, that's not good for us. Let's see here. Okay, let's see. No, wait, what happened? Let's see. Okay, so sometimes it's just not there. Okay, so here I want to show you something. It's very, very important. So please pay attention, because when you do that, we don't want to have such a mistake that you're thinking, okay, that's a great trend line, and then you follow a mistake. So let's an example here. When you have a trend line, if it's very long time frame, to have two, it's okay. And let's say in this case, it's from 2013 to 2022. Okay, but at the same time, it's not so okay, because think about it, you could have put it here too. Okay, and then maybe you would have a losing trade, because if you look at it from, let's say, here to here, it's like 3%, which is $2, and let's say you did that. Okay, let's say you did that. Let's say you did that, you still would have made money, which is great. However, it's not a very good trend line. Okay, let me see 1 second. I don't know why it's happening to me every time. Okay. So what I want to say, one moment, sorry, I will do that. So if let's say an example, okay, what I wanted to say, where you don't want to go wrong here, okay, you need at least 3 hits. Okay, so let's say an example, we have here 1, 2, 3, 4, 5. Okay, in a way it's good. Then you want to go on a daily time frame, okay, and see how it's looked like. Okay, when you will look, you will see that here almost touched. It seems like it's almost touched, but did it touch? It touched, right? Almost touched. Looks like it's almost touched. It didn't really touch, but almost touch, it seems like. Okay, so and that's true. So you see when you see. So you see when so when you come here, okay, and on a monthly you had it all touching, and now it's not touching, you need to make sure that you are correcting it. Very, very important. Okay, because then otherwise otherwise the lines will not be intact with each other. Okay. 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 So you see here, it did not respect this line. But what I'm trying to show you here, it's let's an example, and we did work out with that. This 1 and 2, because it's right close to each other, it's not very good for us. We need to make sure that it's distant from each other. So it might be here one, and let's say here another one within this area, and then it would be you know, at least couple of days or months away, or at least couple of candles away from the current candle that you started from. Okay, because it might be hourly or might be 4 hours. It doesn't matter. You just want that. Okay, so this is about trend lines. You can look at the trend lines from the top. You can look for trend lines from the bottom. Okay, in other videos I will make notes of what another topics to talk about, which will be about the 50% Fibonacci. Okay, 50%, how to use that. Now I will talk about the 2.5%, 2.5 risk to reward. We'll be talking about that right next. Okay, so that here trend line, this is not the most perfect trend line, I will tell you that, but you will not find trend lines on all the charts that we're looking at. So don't stress if you don't find. You sometimes will find only from the bottom, only from the top, going like on a different angle than you want. So it's all depends. Okay, it's all depends. So that's the trend line. We'll make more videos about that as well to make sure. But now I want to talk about the 2.5 risk to reward, which is so crucial because it actually was an interesting one when I spoke to somebody to explain. It's even I had myself about the way I was able to explain them. Okay, so I want to make sure that I write that here. No, I want to make sure that I write that here. So basically, why 2.5 risk to reward? Why 2.5 risk to reward? And that's a very crucial question. Okay. Okay, so basically what you will see, if let's say an example, we are risking $100, another $100, and another $100, and another $100, and another $100. Okay. Okay, so 2, 4, 6, 7. Okay, so those 7 trades will be equal, okay, to $700 that we are losing, because this is one, you're risking one time of the money to 200 and to 2.5 times of the money. Okay, so basically let's take that here. Okay, and look at something. So you had to risk seven times. Okay, you had to risk 7 times to lose 700. But if you have 250, 250, and 250, okay, you basically will be in the win of 750 times. So what that tells you, that you then have to understand that if that's the case, you are able to lose 7 trades. Okay, lose 7 trades, and only win 3 and still be profitable. Okay, so you will be in profit of $50 in total, but you can lose 7 trades and only win 3 trades to make it better. Now I know what most of you might think right away. Okay, so I will do it 1 to 3, 1 to 5. It's a normal human being thing to think right away, but then we have a system that we follow. Okay, because a lot of people say, yeah, people think it's risk to reward and that's it. Sure, people will always have something to say. So let's make sure that we work it the right way. Okay, so what you want to make sure that you do, okay, you will want to make sure that we take this. Okay, where is it? Disappeared on me. Where is it? You will want to make sure my 750. Okay, I don't know. I guess the other one disappeared on me. But what you will want to make sure is basically the following. One moment. So what you want to make sure you ask yourself, okay, what am I comfortable, okay, with losing on a trade? Okay. What am I comfortable losing on trade? Once you answer to yourself that, now let's an example, your answer is $100 as we gave in that example. Then we know that we are okay with losing $100. Now then what we have to understand, if we do shares, okay, then we understand that each $1 that moves on a share will be $1, right? For us as a loss if it's moved against us. So what you then can say, if you giving yourself as an example, okay, as an example, $2, okay, you giving yourself as a loss $2 and as a gain, then we understand that we have to give ourselves, no, it needs to be 55, right? No, it will need to be 50. No, it will need to be 52, 53. Perfect. So it will need to be roughly about 53 to be 2.5 risk to reward. Okay. So what you can understand right here, that if this is your entry and it's only that one entry, and you are comfortable with losing $100 to prove yourself wrong and everything, then you can trade only up to 50 shares. Okay. $100. You are only comfortable with losing 50 shares in that case. Why? Because 50 times 2 will be equal $100. So this is $2 move. Okay, that's your stop loss. You will lose the $100, and it's very important to know your thesis and your plan before doing the trade. So you trade your plan and you don't have emotions. Okay, it's super important, very, very important. I can't stress that enough, because I personally also at the beginning when I started, I was like, don't worry, I know what to do. If anything, I will hold a bit. But imagine yourself, let's say an example. You see this here, okay? You see this here going down, and you're like, wow, I'm going to short now right here, okay? And you say, I'm gonna short, and it's a great move down. And what happened? You short, no stop loss, that all of a sudden you are mistaken, okay? And what happened instead? It's just moving up and moving up and moving up, and you are already at the loss. Let's say an example, if you bought 100 shares, you're basically losing over $1,000 already here, and it's never came back down to where you wanted. So here you're already at a loss of like, let's say $100, $200. And you're like, oh, don't worry, it will come down a bit. It's coming down. You're like, okay, so now it's going to my direction. I will hold it. Maybe it will be in profit. And boom, it's going on and on and on and on. You're in a loss of $700, $800, $900, over $1,000 already. And you would not be able to protect your profit. But imagine yourself, you had your stop loss and you just protected $100 loss versus becoming 10 times more of it. Okay, so it's so important. Know that, understand that, and follow that to the T, because that's the only thing that will help you grow over time. So you can have 7 mistaken trades and only 3 correct, and you will be making money. Understand what is the amount of money that you feel comfortable with losing, and then make your plan around that with the right pieces of how you don't want to, like, you want the plan to go towards you, so then you can have multiple of exit, because you have 50 shares and they're on the loss of $100 with the potential of making over $250 in this case right here, or in this case will be even more, yeah, well, 250 right here, and potentially you can even make a lot more if you basically will do 20 shares exit at 1-to-1, another 20 shares exit at 1 to 2.5, and another 10 shares you can hold to exit at 3 or 4 or 5. You're already in profit. You will never lose that. Okay, we will be into multiple entries and exits in other videos, but I hope you guys learned a lot in this video, and let me know if you have any question. Thumbs up, thumbs down, any type of feedback will be appreciated. I'm looking to learn and grow and know how to present myself as well better to you guys, so please feel free to let me know if you have any questions or something wasn't as clear. I'm here to make it even more simpler and more easier for you to grow in the stocks and the trading world, because I myself believe that it's one of the greatest businesses if you really focus, and we will talk in other videos why I believe that as well from my own experience. Thank you. Have a great one. See you in the next one.